Hi, I'm Wayne Kokinda with William Ravis Real Estate. It is Monday, March 28th, and we're here with the numbers for the week. So let's see what's going on in the neighborhood here. We've got Westchester County, and you're going to see the same story all the way through here. Inventory is way down 39% from a year ago. New listings are down 50%, but pricing continues to remain strong. It's up about 5% average sale price in the county and up 8.9% on price per square foot. Putnam County, similar story, down 24% for active listings. New listings are down 26%. You can see pricing is remaining very strong, up 26% from a year ago and up 9.6% on a square foot basis. Days on market at 61 here in Putnam County. Take a look at Yorktown. Inventory down just one unit from a year ago, so no big change there. New listings are way down 15%. Pricing remains extremely strong at $619. That's a 24% increase from a year ago on average. And the price per square foot remains the same as a year ago, $293 versus $293. Days on market at 26, very quick market. Town of Cortlandt, similar story, inventory down 20% from a year ago and new listings are down 37%. You can see solds are down 14% here, no different than anywhere else. Average sale price though, up 16% and price per square foot up 13%. Days on market at 43, very strong market. Lots of buyers out there. Town of Somers, no different story here. Inventory down 38% from a year ago. You can see solds are down 45%. You can't sell what you don't have. That's the issue here. Average sale price up 16%, price per square foot up a couple bucks, $259 versus $257, and days on market at 76. Story throughout the county, Putnam and Westchester both, is lack of inventory. There's no lack of demand. We've got plenty of buyers. You can see that with the pricing. Pricing continues to go up and hold strong. Let's take a look at what the mortgage rates are looking to do here. You can see that rates are moved up. Rising inflation, escalating geopolitical uncertainty, and the Fed's actions are driving rates higher and weakening consumers' purchasing power. The demand is still there, but it does weaken the purchasing power of anybody when you're paying a higher interest rate. They're up to 4.42 on average right now. You can see from the beginning of the year at just a little over 3. They've gone up well over a point, almost a point and a half here in the first 3 months. And from the chief economist at Freddie Mac, his take is that rates are going to continue to move higher throughout the balance of 2022, but they feel they're going to moderate. We should not see as quick of an increase the rest of the year as we've seen in the first 3 months. So we'll see what happens with the Fed's policy. The impact of rising rates on home prices. Has there been any significant impact? Take a look at the data here. You've got 6 different data points here when the markets were changing and the rates were going up. In October of 93, there was an increase of 2.38%. Home prices still went up 3%. In 96, went up 1.2%. Home prices still went up 2%. In 1998 through May 2000, rates went up almost 2 points. The 13% increase in pricing occurred. In 03 to 04, up a point. Again, increase in home prices 13%. In 05 to 06, went up another point. Home prices still increased 7%. And in 2012 to 2013, there was an increase of 1.1, and prices went up 11%. So indications are that the increase in interest rates have little to no impact on what's going on in the marketplace. Let's take a look at another piece of information here. When the increase went up 2.38%, the rate was at 9.2. Home sales decreased 11% that year. So although prices went up, sales came down 11%. You can see for the other periods where the final rates were 8, 6, 6.7, and here in 2013, the last one, 4.46. Although home prices went up in every one of those periods, there were a couple of instances where the actual home sales decreased 11% in 94. And when you look at the 2005 to 2006, the actual sales went down 14%. Other than that, it was about a 2% change overall. Let's take a look at one more piece of information relative to this. Inventory. That's the old supply and demand story. In 96 and 98 to 2000, we don't really have the data for that, so we can't really do any analysis there. But 03 to 04, there were 5 months worth of inventory. 05 to 06, similar story, 4.5 months. And 2012 to 2013, 4.8 months. Right now, inventory is hovering below 2 months. So that 5 to 4.5 months is a little bit of a seller's market, but just on the edge of being a what we call a balanced market between buyers and sellers. Today, it's definitely a seller's market with supply very, very low, less than half of what it was across the country and especially locally. In some of the towns here, the inventory is about 1.5 months supply. So history suggests also that when the rates do increase, there is an initial bump in home prices because a lot of people are moving more quickly to buy a home before the rates further increase. But after that, the prices tend to slow a little bit. Freddie has done an analysis that shows a 1% increase in mortgage rate results in a home appreciation that's 4 percentage points lower. So as an example, when the rates go up about a 1% increase, that would change home price growth from 11% to 7%. So you're still seeing growth, you're just not seeing as much growth or as fast a growth. So key point here, with rates rising and expected to rise through 2023, that's another year and 9 months, makes sense to obtain a purchase or refinance if you're in good standing to do so. So those of you looking to sell or move on, now's a good time to do it. If you have any questions about any particulars in your neighborhood, your own personal home, feel free to reach out. Until then, I hope you enjoy the spring.